Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, November 29th. This is the weekly market update. The disclaimer, anything that you hear or see on this podcast or video is not to be taken as investment advice. I am not a registered financial advisor, and I cannot give you personal financial advice. Please do your own due diligence. It's your money, it's your responsibility. Okay, so wow, a lot of fireworks there in the slow trading day yesterday on Friday on silver, breaking to new nominal highs, 55, 54, $55 an ounce, breaking out from multi-decade highs, nominal high, new nominal high. And gold also doing very well. And of course, everybody wants to know why this is happening, what's going on. So there was an article at CNBC. I'm just going to, you know, who knows? Basically, these things are in long-term bull markets, as we've said before. And what I think is more important is, yeah, it makes a new all-time high. But if you go back to like 1980, when the Hunt brothers tried to corner the silver market and silver hit $50 in 1980 is worth a lot less than $50 in 2025. If you want to look at what a real all-time high would be, we're so far away from the real all-time highs, it would be something like $200 an ounce for silver. So wake me up when we get to $200. Nevertheless, this is important technically and for sentiment reasons. So this is an article from CNB. It said silver hits record highs in 2025. Here's why the devil's metal has further to run. Silver, often nicknamed the devil's metal because of its volatility, has reached record highs this year and still has further to run despite a supply crunch, according to experts. Quote, silver is only about a tenth the size of the gold market, and that short squeeze obviously sort of caught a few investors by surprise. What isn't necessarily so visible to people is what's happening in the vaults. And that had reached a point where there was basically no available metal left in London. So I don't know exactly what's going on. Obviously, I'm not an expert on the silver market. I'm a generalist investor. Uh, I had not really participated in a lot of silver stocks. Of course, I have investments in bullion or savings in bullion, if you will, that I've accumulated over my life, which I would never sell until we can blow off top, till we get into those triple digits. But and we see a new monetary regime, but that's further down the road. But regardless, I had not really participated in buying silver stocks and in the past. So you know that about a month ago, a month and a half ago, whatever it was, I had said on this channel that gold stocks in particular were overbought. It doesn't mean that the bull market's over in gold. People weren't able to seem to make that distinction. Maybe I didn't communicate it properly. And so I said, when people are lining up on the street, the average person, the average investor to buy bullion, buy their 1 ounce coin, that's probably an intermediate top. And it, of course, proved to be right. And so we've consolidated a lot of the tourists and retail went away. And I was looking for, okay, I think that after, my mindset was, okay, I didn't really buy any silver stocks up to this point. And so when we see this pullback which I thought would happen, and it did happen, that would be the time to reload because at some point, this is how bull markets work. They 2 steps forward, 1 step back. And so I did not publish in the newsletter, but on our Discord for Actionable Intelligence Alert newsletter subscribers, I mentioned a couple of silver stocks that I bought, and then another unique royalty type situation. That's kind of a developing royalty situation. And so I bought a couple silver stock uh, and kind of thinking them more of, now that a lot of the FOMO got flushed out and a lot of the retail and tourists left, was time to, at least have some silver speculative positions in my portfolio. So we put a couple names out there and they've done very well. And so um, I think this is the way you really have to play this thing. When sentiment gets really bad, you know that you're in a long-term multi-year bull market in these metals, okay? I'm talking about specifically gold and silver now because they're so volatile, especially silver, that when things get flushed out in the intermediate term or short term and prices go down or retrench or consolidate, because these things are so volatile, you're able to buy them a lot cheaper than, you know, you were in the past. The band of between the highs and the lows of these things are very high, or the gap is pretty significant. So you have to use this volatility as your friend. And so we got into some silver stocks. They've already done well. They're not even back to their old all-time highs yet, uh, even though the metals made a new high. But these are cash flowing businesses that are going to be expanding production. So do I anticipate holding them straight through for another 2 or 3 or 4 or 5 years? Probably not. We'll probably get into a situation where we'll get more FOMO as the metals make new highs. We'll have, these indications of sentiment being too bullish, and so we'll probably take down some positions when they get extremely overbought again, and then wait for the inevitable pullback. Ride the 2 steps forward, wait for things to get overbought, sell, wait for the flush, intermediate flush, let sentiment get, 2 steps forward, 1 step back, and then re-enter the position. That's how I think I'm playing these stocks. It doesn't mean I don't think that gold, silver are in a fundamental long-term bull markets. They are. The stocks are very volatile. And so that can be used to your advantage. Make volatility your friend. I mean, when sentiment gets so obviously overbought, and you're up hundreds of percent, I mean, I don't think this is what happens. Then you get the people that are the long-term hold, the hodlers. We have it in crypto. We also have it in, gold and silver mining stocks. They're not heirlooms. They're not investments. They're speculations, okay? And they're very volatile. And it's a situation where if you understand emotion and psychology, you can really mint a lot of money by following the volatility. We know we have an uptrend. We know we're in a bull market, but these things are so volatile, you're able to, if you want to ride through these things and you have the stomach for it, then that's, your prerogative. But when things become so overbought or so oversold that it's obvious, I think, you can use that to your advantage. And that's what we've done. And so going on here, this is a chart from Tavi Costa. This is a multi-decade. This is going back to 1980s when Hunt brothers were around, and then back in like 2010. And you see this like $50 uh, situation. And so the idea is, well, this is a huge multi-decade cup and handle. I think not a lot, but I don't know how many, but I've heard very skilled technical analysts say that when you're looking at cup and handles for multi-decade, they're not necessarily as effective as people think, but then there's the other group that says they are. Anyways, what we're seeing now is a break above, basically 40-year, 45-year breakout, basically, on a cup and handle, which are very powerful. This is kind of similar to what happened in gold. And so I think silver's going to make, again, you inflation adjust it, and it's nowhere near its all-time highs. Again, $50 silver is a lot cheaper in real terms than $50 silver in 1980 or even in 2010. It's extremely cheap relative, okay? Relative to what? Well, relative to gold. Here's the gold and silver ratio going back just a few years, but there's a website called Long Term Trends. They have this going back to like 1693, I think, this gold and silver ratio. And you see, basically, when I became really interested and knew this was going to really move, and so did a lot of other folks, is when this is an extreme outlier. when the gold and silver ratio got to 100. Historically, throughout history, it's kind of averaged around 15 to 1, especially when silver was more of a monetary metal. So right now we're at 70 to 1, or really above that, and we're breaking down. And so silver is outperforming gold, basically. Okay. And so we've already had a tremendous run in silver. It's breaking out again from a long-term charts on the charts technically. So I think that, you can do something here. Again, I think if the metal price keeps moving up, it makes a run and, into the high 50s or put the six handle on it, then you're going to start getting some more FOMO. So we'll have to watch the sentiment. We'll have to watch the FOMO and the psychology of the market. And I think it's, the reload a few weeks ago or last week or so has worked out fairly well for people that, you know, uh, are following us in the Discord channel. That's what I'm doing. Again, these things move so fast that, again, I don't want to turn the Actionable Intelligence Alert newsletter into a um, tout sheet where I'm trading this, trading that. Occasionally, I will put out things like this, and a lot of times I'll announce them in the Discord because that's just the benefit of, real time. This is what I'm doing in real time. This is why I'm doing it. But I'm not going to be issuing special alerts and turn this thing into a trading service and a tout sheet like at the racetrack. Here's a hot tip for you. Get in now. I mean, I don't want to do that. Your long term gold and silver are in a bull market. It's going to be multi-year. It has been multi-year. We're in the middle of it. Bullion prices are going substantially higher. And I think because of the characteristics inherent in these mining stocks, you can trade them through this bull market and use the volatility to, you know, kind of turn them into an ATM or a broken slot machine, if you will. So anyway, that's what we're doing. That's what I'm doing. So copper is looking very good also. Copper is making new recent highs. You see that it was pushing close to $6 a pound. Then we had the, Trump tariff situation around copper and it dropped. But, you see that the demand is there. Why? It's not necessarily like back when China in the aughts was like acting as a black hole and sucking in all of the commodities around the world. This is supply driven. Again, I believe that this super cycle will be supply driven because of lack of investment and also the basically it's more difficult to get to the remaining ore bodies, more expensive, more time consuming. They're not going to be developed as quickly and they are more technically uh, complex in many cases. And so I'm looking at global PMIs. They're still above 50. Yes, there are some places that are below 50, like Europe. But if you look at the globe overall, we're above 50. The US is above 50. China's above 50. A lot of people are saying we're going to have a recession, but the Atlanta Fed third quarter GDP is showing like 4.3%. Now, that doesn't mean that we're not in some type of bifurcated economy. Of course, I agree that we're in a K-shaped bifurcated economy. If you have money, if you have assets, you've benefited, you're doing well. If you're a wage earner, inflation has eaten you alive. So we're going through this transition, hopefully, where we get rid of, 10, 15, 20 million people, low wage workers. And that's going to take some time to get these folks out, get them out of the apartments they're in, get them out of the houses that they're in, get them out of the jobs that they're in, and allow that to work its way through the economy and prices. The supply for housing will go up, supply for apartments will go up, rents and prices should come down. Lack of labor availability because you're getting rid of this cohort of low-wage workers will cause wages for working people, wage earners, to go up. It takes time. Nevertheless, getting back to the metal, I think copper's going a lot higher this decade. So in the Actionable Intelligence Alert newsletter, we were able to buy a copper producer that had run into some problems, but I think it's being run by one of the best mining entrepreneurs in the world, if not the world. that has been serially successful in bringing mines online. And this particular company is getting over through the issue that caused its share price to decline and is getting back on stride. So not only that, it has an extreme amount of uh, large amount of potential exploration upside. It's really starting to hit on 16 cylinders. So that's something that we were able to buy uh, because it was out of favor. People immediately, when bad news comes, they throw everything out. Sell first, ask questions later. Um, we were able to take a look at it and determine that yes, this was not good, but it wasn't the end of the world, and that the management would be able to recover and get back on plane. And so, I think copper continues to move higher. So do many analysts. These are different articles that came out. As I think it's mining.com. Copper prices in London hit a fresh high on Friday in the wake of bullish calls by participants of this week's industry gathering in Asia. The surge comes after miners, smelters, and traders met in Shanghai this week, with discussions focused on a tightening market. Natalie Scott Gray, a senior metal analyst at StoneX Financial, said, talking about this other guy that was at this other firm, making a bullish call on copper against a backdrop in which we already for year end have a perfect storm bull narrative, citing the impact of tariffs and improved macroeconomic outlook and supply disruptions. So she's talking about this Bintus guy over at Mercuria Metals. Costas Bintus, the high profile head of metals at Mercuria Energy Group, has renewed his bullish prediction for copper prices as he warned that a rush to ship metal to the U.S. risks draining the rest of the world's inventories. Traders have been ramping up shipments to the U.S. in recent weeks to once again capitalize on a big premium for metal on New York's COMEX exchange, fueled by ongoing uncertainty about the potential for future tariffs. This is the big one, he said in an interview at the end of the key industry conference in Shanghai. If the world keeps going like this, we will be left without copper cathodes in the rest of the world. His bullish call is the latest prediction that a long anticipated surge in copper prices may finally be about to occur, with executives at rival trading houses, IXM and Gunvor Group, also warning in recent months that the string of mine disruptions risk creating supply shortfalls. And that's kind of based what I've been basing my bullishness on. You have the mine in the Quantum Metals, I think it was, or First Quantum, big mine in Panama. They brought online, Panamanian government shut it down. The issues at the Grasberg mine in Indonesia, the Kamoa mine in DRC, the Codelco having problems maintaining production in Chile. These are leading to about somewhere around a 9% decline in supply. Um, this was in the face of what many analysts had thought was already going to be a supply deficit for copper. And so, yeah, I'm not saying that this is like this big China 2.0 is going to suck all this copper in. You just have supply disruptions and underinvestment and struggles to maintain production. And so these things are priced at the margin. And here you go. So a lot of folks are saying, well, some folks are saying, well, we're going to have this big global recession. We've been cutting rates around the world for 2 years, and the US is now cutting rates. That doesn't mean that, there won't be certain economies that are in recession. I mean, Europe is a basket case, Western Europe. And so, the US is, again, a bifurcated economy that's dependent on asset bubbles. So if the stock market takes a big hit, what does that do to spending? So there are problems out there. There are potential pitfalls, but there are also positives. And so I think that if you lower rates enough, you get enough stimulus going around the world that eventually, that's why I watch it PMIs, manufacturing PMI, because if PMIs are above 50, that means that manufacturing is expanding, and that's going to require more mineral inputs, resource inputs, which puts, again, and the global PMI is above 50. So um, I think rate cuts continue around the world. I track those. It's been basically the world's been in a net rate cutting cycle for over 2 years now, and that's feeding throughout the various economies. And so I think that again, the underinvestment, I think, is what's being underappreciated in many cases. You don't need that much of a big pickup in demand if your supply got clocked for 9%. So that's why I think that we'll probably see higher prices in some of these things. Look at the tin price, something, a smaller market that gets ignored. I mean, there's not really many ways to play this. I'll just throw the name out there that I own. I own a small position in this Alpha Min, which has I think, a very decent tin mine in the DRC, Democratic Republic of Congo. I think the company pays around a 7 to 8% dividend. And so, tin prices are working their way higher. And I'm always looking for potential ways to play tin. Most people are just going to say, well, buy Alpha Min or Metals X. Those are basically the two companies that are publicly traded. But I think if you deep dive this, I'm looking at something right now that an acquaintance turned me on to, a colleague turned me on to, and I will take a look at it and see if it might be, it sounds interesting at the back of the napkin pitch. So always looking for ways to integrate, like tungsten's another one that's really taken off, but how do you play it? Again, I only have so many hours in a day and you can only kiss so many girls. So you have to look at your bandwidth and can you be involved in everything? It's not possible. So pick our spots. But I think that, these are interesting charts. You look at them, you say, okay, well, something's happening here. Well, this is another metal that is having supply demand issues. So here's a tweet by Uranium Insider. Just wanted to remind folks we are in a uranium bull market, even though a lot of people don't think so, or are impatient or frustrated by how it's moving. But regardless, um, it is happening. Uranium term prices continues higher. It says UXC reported long-term U308 price moved up again for the month of November, now at $86 a pound, a $6 move following 14 months of stagnation. $2 up $2 per month for the last 3 months. Total long-term volume for 2025 now stands at 74.9 million pounds. And so again, not to repeat it, you're sounding, you don't want to be that old relative that just tells the same stories over and over at the holiday gatherings. But this is what it is. It is what it is. We're in a long-term bull market. Nuclear has completely, the zeitgeist has changed. Everybody's pro-nuclear now. 5 years ago, everybody hated nuclear. We were ahead of the curve. We've profited greatly from it and we'll continue. And I'm looking now into other facets of the nuclear industry to take advantage because I think that there's going to be billions, if not trillions of dollars spent on new nuclear generation and all the components and all the engineering and all the things that go into that are going to provide opportunity, not just buying junior uranium stocks. So I think there's a lot of opportunity out there, a lot of companies that are going to do well in this environment. You throw a company out there like Curtiss-Wright, listen to they make nuclear plant components and listen to their recent conference call. I mean, it's off the hook. So this is going to continue. It's just a matter of doing the work and trying to find out who is situated. Again, this is an industry that was basically atrophied for decades on the shelf. No one cared. And so now you want to ramp this thing, you want to go from 0 to 100, and you just don't have the people, the machines, the talent. It's going to take time to ramp this up. So companies that are the incumbents stand to really benefit from the surge in investment. The question will be, can they actually ramp up? And that'll be interesting. If you're somebody that's pursuing a degree, why not become a nuclear engineer? Why not become a petroleum engineer? Everybody wants to be a brand manager at Meta, with their communications degree or what have you. drink free lattes and get free breakfast. I mean, I would want to be in something that has a long runway, regardless. And I think nuclear power is that. It's happening. It's worldwide now. So this is interesting news reported last week. The U.S. Import-Export Bank to invest $100 billion in critical minerals and energy, says chair. The U.S. Export-Import Bank will invest $100 billion in support of the Trump administration's strategy of achieving global energy dominance, the Export Credit Agency said. In an interview with the Financial Times, newly appointed chair John Jovanovic said that the move aims to address the West's over-reliance on supplies from China and Russia. Quote, we can't do anything else that we're trying to do without these underlying critical raw material supply chains being secure, stable, and functioning. So they have 100 billion. I think it's actually 150 billion. They've already invested quite like 30 billion, I think. But I thought it was an interesting article. I'll put a link to it in the show notes. We're going to see more of this, right? We have to, the competitors that we have, like in Russia and China, they have industrial policies. The state does pick winners. The state does invest in strategic industries and metals and things like this because that's what they need to do to be players on the world stage. You can't just, we don't live in this Murray Rothbard libertarian world where everybody's an angel and everybody's doing the right thing. That's, have competing interests. You have players that don't necessarily have the interests of each country. Again, kind of go back to what one of the people that I admire, I don't admire his ideology, but I admire his way of stating things. And that's Rabbi Meir Kahane when he said that, talking about the relationship that Israel and U.S. had, this was a long time ago. We're not allies. We have, countries don't have allies. They have interests, and the interests change over time. So you have to be able to pivot. I agree with that. And so this is, what's the U.S. interest? Well, we have neglected, these other countries aren't encumbered with our egalitarian views of the Enlightenment, of Western European Enlightenment and democracy and all this. They have strategic interests. They don't have to rely on voting every 2 and 4 years. And so they say, okay, we're going to have nuclear power growth, like in China. They build tens, tens, tens and tens and tens of nuclear reactors. Well, then you have to have the supply chain, the fuel, all that stuff. They invest the money. Same thing with the rare earths. We have this rare earth asset where we can become dominant in it. We're going to do that. Okay. Well, it's very polluting. But they don't have activists filing lawsuits in China. If you can say that that's not good or that's not right, but that's the way it is. It's the same thing in Russia. They have strategic industries and they invest in them the way it is. They don't have a private sector defense industry in Russia. It's controlled by the state. Does that mean it's efficient? I don't know. Probably not. Does that mean that it's uh, technologically going to be at the cutting edge? I don't know. Probably not. But what it does mean is that it's not, is there grifting going on? I'm sure there is, but it's not profit based. And that's why they've been able to ramp up and outproduce Western Europe and the US because we have, a different system here. And so people will poo-poo this and say, well, well, my libertarian sensibilities are offended that we are having this fascistic, picking winners. Look, man, if you want to be in head of AI and lead the charge on that, you need to uh, build out your infrastructure, and it's consuming a tremendous amount of power. So if you just wait for price signals to fix the problem, you're going to fall behind. Okay. And so because, we're dealing with on a geopolitical scale on these things, you got to get in there and get this done. And so this provides, whether you agree with it or like it or not, this is what's happening. And so my point is that this is going to create more and more opportunity. You have to really like pay attention to what's going on and say, okay, well, $100 billion is not chump change, and there's probably more to come. So keeping an eye on this. I'm going to put this in my Google Trends for, U.S. import-export bank investments and see what shows up on a weekly basis. I use that, like as I said before, as a tool to crack certain search terms or statements, and then it will send me article, uh, scrape the internet and find things for me and send me a daily email says, get ahead of these things, these obscure things that are happening before the mainstream picks up on it. This is something that we know is happening, but the article is pretty interesting because it talks about the actual investments that are happening. I mean, they're in progress as we speak. Art Berman, somebody that I follow on oil and gas. I don't necessarily agree with everything that he says. He's pretty, seems a little bit, to the left, and he's a big time environmentalist. I don't share all of his views, but he's usually pretty good on, um, you know, a lot of his discussions around oil and gas and the so-called energy transition, and that's kind of bogus from a thermodynamics and financial perspective. But here's a tweet from him. Exxon pauses world's biggest hydrogen projects. He says here, another renewable fantasy bites the dust. Exxon just hit pause on one of the world's biggest hydrogen projects because, shocker, no one wants to buy expensive blue hydrogen. Well, why would they when natural gas is so cheap and oil is at, historically low prices relative, to history? $60 a barrel oil in real terms is extremely cheap relative to the historical um, I mean, nominally, it's real cheap. So, uh, who's going to, all these little fantasies, people are not going to overpay two, three, four times whatever it is for this stuff. And so, unless you're going to, it's like this goofy thing that Occidental Petroleum's involved with because of the government subsidy of building these big plants that pull CO2 out of the atmosphere. Well, if the government's going to give you free money to do that, okay, I'll do it. It might offend, as Rick Rule would say when he was talking about geothermal and all the subsidies and things that were going into that. We had that geothermal boom about 10 or 15 years ago. I like what he said about it at a conference. I heard him say this with that smirk that he always has. That's kind of funny. He says, it may offend all of my libertarian and anarcho-capitalist sensibilities, but it stimulates every fiber of my greed. So this is an example, you know, that sounds crass to some people, but what he's really saying is that, okay, you can have your beliefs, but we're in this to make money. We got to kill what we eat. Okay. And so we got to say, look at the world for the way it is, not the way we want it to be, and invest accordingly. So what is cheap? Look at the bottom, Latin America. You know, one caveat I would throw out here is say, well, or somebody told me, well, you're big on Latin America, but it's cheap for a reason. It's cheap for a reason because, the government situation there, the laws, rule of law, it's not the same as the US. But is it worth a 30-point differential to, is the US getting better on the rule of law or is it eroding over time? Is the West, you know, becoming more confiscation minded in its taxing policies? Is it becoming more of a regulatory burden? Is it going more left to the left economically speaking? What we're seeing in Latin America is a revolution politically. Okay, things are moving. It goes through these periods, but I don't think we've ever seen anything like we're seeing now. Country after country after country is having elections and swinging to the right right side of the ledger on its thinking, pro market. Does that mean that it has the same rule of law? No, and it should be discounted to a certain extent, but it's so cheap, I think it makes up for that. Look at the UK relative to the rest of these things, and look at the emerging markets. These things are cheap relative to the US and the developed world. And so UK, I think right now, currently, in the current environment there, political environment, is not investable. However, it should be on your radar screen. I have a whole list of North Sea oil and gas companies that are UK based that have had the junk knocked out of them because of the stupid 78% um, excess profits tax that was implemented during the pandemic when oil prices after the pandemic when oil prices surged, okay? And they've redone that because they're desperate for revenue. Okay, you have a left-wing government, labor government that wants to spend, 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 tax, 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 regulate, regulate, regulate. So if that changes, the reason I bring this up is you have to be looking at it. That I'm looking at it and I have a shopping list. If we have a change in government there, if reform wins, it's just a perception change. And a lot of these things, I think they'll scrap many of these things and you'll get a big move, okay, in a lot of these companies. So it's worth looking at. And of course, Latin America, I'm very bullish on it. I talk about it all the time in the newsletter. We have investments. We just had the recent elections in Chile, the first round. This guy Cast, that's a center, well, he's right-wing candidate. He's him and this other lady that's a communist are going to the second round. Well, she actually had, I think, a little bit higher percentage when they had the first round, but anybody can run in the first round. But if you look at the top three or four candidates, they're all center right or right wing candidates. So he's going to win the election. Okay. Same thing, 20 years, I've said this before, over 20 years of socialist backwardness in Bolivia, they have now a center right government. We already know what happened in Argentina. Lula is at like 40% popularity in Brazil. Okay. You're going to have elections next spring in Colombia, and Petro's not looking good. So there's something happening there. Okay. Maybe the best thing to do is just say, hey, I don't know what to do. I'm just going to buy, they have their own trading block. There's a lot of trading that goes on there. There's a lot of kind of these unknown advantages I think that Latin America has that people don't pay attention to. They have this trading block where they do a lot of trading among themselves. So why not look at something like Mercado Libre, basically an Amazon, if you will, of Latin America, something that may be interesting. I don't own it. I'm just throwing that out there. So there's ways to, I think, and these situations that we bought have done well, and I think they'll continue to do well. So, and of course, I'm really bullish on emerging and frontier markets going forward. I think they're going to have an 8 to 10 year upcycle. And so things are happening. And again, I don't buy overvalued markets. It's cyclically adjusted PE ratio. I'm not paying 43 times earnings. I'm not going to do it. I don't care what the hype is. It's it's almost 100% guaranteed that over the 7 to 10 year period, if you pay this high, your returns are going to be low. You're going to be looking at a 50% plus drawdown during that period at some point in one single year. And it's going to end up where you underperform. These things cannot just continue to go up, up, and up. Valuation at some point does matter. But to this point, it hasn't. So there you go. I think that I'm outperforming the S&P. I have been for since I've basically had the newsletter, even though I had a rocky start with the newsletter. And I'm crushing the S&P. Maybe people say, well, why do you use that as a benchmark? Because most people, as I've said before, should just put their money in a low cost world ETF, okay, and let it that gets rebalanced based on the type of based on like the GDPs of the countries. For example, China, for example, is somewhere around 20% of the world's GDP, creeping up behind the US, but it's only like 5% market cap for different reasons. That's going to change. Okay. Where's the growth coming from? Where's the innovation? I mean, we've talked about this. And so that's what most people do, but most people don't do that. Or they should just put their money in an S&P fund. Probably not now because the way that's skewed, but that's been, the suggestion to be passive investors. Okay. Because most people don't have the time or inclination or emotional IQ to do what I do. So that's why, we have subscribers to the newsletter. We put out ideas. It's what I'm doing in my own portfolio, why I'm doing it, and looking for things that are undervalued and buying them, and hopefully them becoming, you know, fully valued, if not overvalued at some point. So far it's been working. And this is how I do it. I look at what's cheap. That's the starting point. What's cheap relative? What's overvalued? What's overvalued, I have no interest in. Okay. If you've made a ton of money in the Mag 7 and AI and you have a certain expertise, good for you. Allah be with you. I'm happy for you. I'm not sad about it. I have no expertise there. I have no edge there. I can't compete with you. Okay. But most people don't. Most people are just speculating, you know, and their plan is stonks go higher. I buy, stonks go higher. I mean, stocks go down, stonks go down, I buy because stonks go higher. Well, that's speculating. That's hoping for a higher price um, because stonks go higher. I mean, that's really what most of these people are doing, and it's worked so far. And what long term it won't work for them. All right, I wanted to point this out because this is a risk I think that people need to keep in mind for the oil market. This is a showing Venezuelan oil production going back to 1920. And you see that at one point, there's a couple points in the history of the Venezuelan oil industry where they had production above 3 million barrels a day, most recently around 2000. And then, of course, we know the whole, since Hugo Chavez and Nicolas Maduro governments, you can see shaded in gray what happened. They just used it as a cash till to give for political favors and to steal money. And, again, these are extractive industries. You have a certain amount of capital spending, maintenance capital spending that needs to happen, or the thing deteriorates and the wells get all nutted up and all the things that you have to do to keep an oil field producing or expanding. They weren't doing. And they were using it as a piggy bank, and you see what happened. Now you see that it's kind of bottomed and gotten back up to around 1 million barrels a day. That's because of during the last administration to help in the election, Biden was allowing, I think, Chevron and I can't remember who else to go in there and do some work. And then obviously the Chinese and Russians are in there. But let's just say, for example, that, there's a lot of discussion right now around overthrowing the current Venezuelan government, Nicolas Maduro, forcefully as part of whether you agree with it or not, the what I call the Donroe Doctrine, a take on the Monroe Doctrine, the U.S. exerting its influence in the Western Hemisphere as the world bifurcates into the multipolar world. And so, what happens if we do overthrow Maduro and put a U.S. backed puppet in charge? Well, obviously, there's going to be um, immediate chance to get U.S. oil companies in there, foreign oil companies, U.S. in particular, I'm sure. And they've already said that, they know what they can do. They know what needs to happen. It's all basic blocking and tackling. It's nothing, Venezuela has the largest oil reserves in the world. And that's, and so, yeah, of course, if you can control that, you basically secure the United States' oil supply for the next 100 years. So that, it has nothing to do with democracy or raising the living standards of the Venezuelan people or allowing them to vote and all this, because inside every Venezuelan is an American trying to get out. That's to do with oil and money. That's what it, and geopolitical and national security interests. That's what this is about. And so if we do get in there, if we are able to put this Nobel Peace Prize puppet in charge, she's just going to sit there and sign whatever they tell her to sign, and these guys will go in there and they could get production up pretty quick. They said they could get within a year or so double production, and then from there it's just a matter of bringing new projects online and continue to invest money. It would take time and billions of dollars, but they would be willing to do it if we had control of it. And so what would that do to the oil price? You see what I'm saying? And this is the type of crude that's actually used in these Gulf Coast refineries in the US. As Mexican production has slid because of the lack of investment there, um, this is an opportunity for the US to exert itself on a weak country and possibly overthrow it and then take control of these oil uh, assets and exploit them for the benefit of the United States. I'm not saying that's a good thing to do. I'm not saying it's a nice thing to do. I'm not, it is what it is. And so what would that do if you added 1 million, 2 million, 3 million barrels of oil over the next 3 years, 4 years, to world production. That's oil production that's going to be needed regardless, but it's something to keep in mind as the Permian production, even though it made a new recent high. Um, this is a literal cornucopia. I mean, how high could they get production? They could easily attain the old highs and go beyond that, in my view. And Venezuela would be like booming, you know? So something to keep on your radar screen as a possible, let's see how it develops and what they do, who can take advantage. Again, these are looking at the world for the way it is. In a perfect world, we would say, Venezuela, you have oil and let's be friends and let's have mutual beneficial outcomes, and blah, 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 blah. But that's not how this works because they have this history of expropriating things. As a matter of fact, there's a court case that's resolving where the expropriation gold mines and some oil assets was adjudicated. It took many years, but finally, what's happening is the refining assets, the Citgo refining assets that were owned by the Venezuelan oil company, are being confiscated and sold to satisfy the judgments against the nationalization of these assets. So that's what they want to avoid. They want to have a puppet in there so they can control it and get U.S. interests in there. It's the same old story: colonialism, resource exploitation. It's the reason why there's a war in Ukraine, why the Western Europeans and the Atlanticist hegemon is trying to break Russia up into 10 or 15 or 20 statelets so they can go in and exploit all the $30 trillion in resources across the 11 time zones of the Russian Federation. This is not hard to understand, but yet many people don't want to accept it. It's why we had the Iraq, part of the reason we had the Iraq war, why all these things ultimately go back to resources and energy, who controls it, uh, and what that means. And people want to ignore that and don't want to accept it. But again, the world's not full of angels. We're not living in a Murray Rothbard, libertarian utopia. We have a lot of people that are bad actors and agents, and we have to accept things for the way they are. Again, I don't think that we should be taking over governments. We probably find different ways to do this, but that is the Don Rowe doctrine, and I think you're going to see more of this. This is why all the big talk about, what would happen if Alberta was to declare independence from Canada. It would be wealthiest country per capita in the world. Its oil wealth and its population would be far wealthier per capita than the Norwegians are. Okay. And so why should they stand there and get exploited by Ottawa? This is why Trump talks about these things. This is what the whole discussion around Greenland was, all of the mineral wealth there. Denmark's not doing anything up there. So, it's in our sphere of influence. That's how these people look at it. So I'm not saying it's right thing to do. I'm not saying it's a nice thing to do. I'm just saying these geopolitical machinations create opportunities for resource speculators and investors. That's what I'm saying. Okay, guys, that's it for this week. Appreciate the viewership. If you like this, you can help me out. If you don't want to be a subscriber, I get it. At least sign up for the free weekly email on Substack. I put a lot of good stuff out there, curate a lot of good podcasts, articles, information about the things that we talk about on this video. But what you can do here is you can share and like and subscribe to the channel. It helps with the algorithm. It helps us grow, and we appreciate it. Happy Thanksgiving, belated, and this entire holiday season. Merry Christmas coming up next. And we're looking forward to, I think 2026 is really going to be a tremendous year. Looking forward to writing about what I'm getting increasingly bullish on around energy and some of these metals. So stay tuned. That's coming in the next over the next few months as we move into 2026. All right, that's it for this week. We'll talk to you next week. Thank you.